Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 298 for May 3rd, 2021. We are recording this at 1 p.m. Eastern Time. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today I have arranged for first-time guest Josh Levitan to join us. He's with Cyber Trading University and works closely with Fausto Puglisi, who's a regular on the show. So it's great to have him here. Always good to have new people on the show. And also the option professor is here to moderate. So I'm going to go ahead and turn it over to him.
Okay, great. Welcome everybody to this Monday. We're going to have a pretty big active Monday here, and we've got a great guest here. Josh, just before we get started, for people who are not familiar with yourself, a little background and also what's going on over at Cyber Trading University.
Absolutely. First and foremost, David, thank you so much for having me on your platform here today. I know that Fausto is supposed to present. He's brought some good backup in myself, so I look forward to this next hour. I've been alongside Fausto in Cyber Trading University since 2014. I actually walked into Cyber Trading University off an Indeed job interview. I came in with zero stock market trading experience. So, going into this timing research event, I know how prestigious this platform is and how wonderful of a guest panel that you typically have on with the amount of experience they have. Don't let that fool you, because for the last 6.5 years, I've been doing this from Monday to Friday, from market open to market close. And that's not necessarily the best starting point for anyone, but it's just to say that I grew into this position. I'm a one-trick pony, not a jack of all trades. That's the way I like to label myself. I tend to follow the order flow just like Fausto does between using level 3 and level 4. And with that, I certainly look forward to talking to you about the S&P coming up across this week. I know that we have a bunch of big earnings announcements still ahead of us.
Yeah, definitely. We have a couple of base questions we ask on Monday mornings, so let's run by them kind of fast. First one is from the opening today, which was around let's call it 41.92 on the S&P, to Friday's close. Do you anticipate the market rising or falling?
So it's funny, because going into this and going into today, let alone this event, I had the expectation of the market dropping off right away upon the open. And I think it was just based on seeing it slowly consolidate higher across the last week without a real big move up or down. And there's a common phrase that I'll mention to our students live inside our cyber group trading room. And, it's just to say, if it's not breaking higher, there's only one other way it's going to go. It could be said for an equity, but of course, an index like the S&P. And going into today, I was looking up just on basic news, websites, MarketWatch, Bloomberg, etc. I go on MarketWatch, literally on their homepage, it says, analysts expect 10% drop off on the S&P across so-and-so time. And, you look ahead, and for as much as it's been going up, you have to expect a drop at some point. Now, for how long that will drop, that's for us to kind of find out and react to, right?
Right, definitely. And we're kind of at a big juncture, this 4,200 plus or minus. It's either going to blow through this thing and really give another leg up, or it's going to finally get the correction you're talking about. So it's kind of a binary area. Do you get that feeling?
I do, just because, like I said, and like you brought up as well, it tends to be just a tighter range of consolidation. You tend to see these pops and then drops, and then just these intermediary closes across the S&P. I'm looking at my chart here, which you cannot see, but that's on the SPY, the S&P ETF, whereas you have, of course, the S&P ticker. So they're of course identical, right? Very similar in that sense. So I'm looking just, and one of the differences between myself and Fausto, he keeps it very simple. Keep it super simple, the KISS trading method that he employs. And I do that for the most part, but across the last 6.5 years, my mind has kind of wandered, my curiosity. I start using moving averages, which he, doesn't use as frequent. And
Right.
I put him on the S&P, or I put him on the SPY daily chart. They've been rotting him up, of course, for the last year plus, going into the last year, I should say. We had the drop off, then the squeeze back up. But for as much as it's been accelerating off even the 20 EMA, this is why I think that we're catching our consolidation here across the last week. And, if it ends up making for a big drop, it wouldn't shock me over time to see a bigger drop just across the next 2-3 months. I know that, that was hinging upon the banks reporting. I know the blue chip companies reported last week, still a couple today, and that might tell part of the story for what's ahead, at least short term.
Right. With regards to, many people that are guests, we ask them what their reasonings are behind what they think it's going to go up or down. But in your situation, you're kind of focused on the order flow. And really, while these reports that come out are kind of, interesting, aren't you more focused on exactly what is being bought and sold, not so much on what the earnings are going to be on a certain day?
Absolutely. So,
Yeah.
that's where we say all the time, just because good news comes out, let alone earnings, but, any sort of news, price could be fixed in. And then after that, even if it's not, and you think it's going to make a big move up off of great earnings, well, what happens if the life gets sucked out of that trade rather quick? The only way to really, or the most efficient way, I should say, to really find that out would be by reading the tape, reading level 3, the ECN book, the order flow altogether, in order to make that determination.
Now, just to give you, just to ask a question from maybe attendee's point of view. Last week we saw stocks such as Microsoft, such as Netflix, such as Apple, to name three, that had very, very strong reports in some measures, yet their price action on their stock. Let's even just talk about Apple. This thing tried to go up into the 140s and made an about face, and it had just a absolutely fabulous report. So did order flow give you any tip that you should fade that, or what do you think?
Not necessarily. I think it's more or less just the fact. I know with Apple in particular, they ended up doing a $90 billion buyback. No.
Yeah, well,
Uh,
they said they're going to, one or the other.
Yep. So I think that could be part of the reason why you might tend to see a slight drop off at first, but long term, that's going to, or that you would like to think with the buyback, they're doing that for a specific reason. So what are they gonna do? What are they gonna use that money on? So for that reason, that's why I think over time, even though you're seeing a small drop off on Apple, you saw a bigger drop off back on Thursday of last week, but now you're seeing the consolidation. Unless if the markets altogether begin to drop, which of course would carry Apple with it, over time,
Mhm.
short term, it should rebound.
Now, getting back to the order flow thing, I mean, when it was going up towards 137, I guess around, wasn't that about as high as it got?
Yep,
Could
139.
you see from order flow that block trades are shorting or selling or liquidating, or could you get any? I mean, does it give you any indication that hey, either volume's drying up here, or there's an awful lot of block selling or anything like that? Or
You definitely would be able to see that. So, David, if you don't mind, I'd love to share my screen very briefly,
please, yeah.
just to kind of show what we nickname Level 4, a company by the name of Bookmap that we've partnered with here at Cyber Training University. Whereas Level 3, what we nickname for the order book, Level 3, the ECN book, those are orders that are looking to be filled. So, with that, this program, Bookmap, provides a heat map type structure to the order book. So it provides a great visual. Oh, actually, you know what? Very briefly, this is very funny going into this. So I'm going to load this up in just a second. Right before we pressed record and David was introducing me here, I ended up losing internet and I had to reboot my computer. So with that, I don't have the Bookmap program up right now. Let me do that here. It takes about maybe a minute. Nonetheless, though, you should be able to see my screen on the Apple chart, my platform. I have it up on a 10-minute graph on the left, and then from there, a daily chart on the right, which you could see the EMAs. Here's level 3. Officially what we call, or officially my platform, TradeStation, the Matrix program. So for Apple right here, you could see really not as many big orders across the bid or the ask at this time. That's partially because just typically going into the late morning, the early afternoon, you typically see much less volume traded per minute. So that's why you're getting that right now, unless if Apple's driving down to a major support that it hasn't tested yet, or reapproaching a major resistance that it fell through just previously throughout the morning. I would not expect for there to be much visibility out there. Now, with that said, with Bookmap, this program, it will show you that and will show you the history across the order book from the day today. So I have it up right now. You should be able to see it, right?
Yeah, I can see it.
Okay, great. So, I cannot show that pop back from the 27th from last week. I think, or what was the 27th or the 28th. This can only go back just the previous 24 hours, so that including just mainly today. So if you could picture this just kind of being the earnings-based pop that we caught back from the 28th, well, notice that these darker orange lines that are out here, right, the horizontal red and orange lines, those represent orders on the ask, big sell orders, traders that are shareholders that are looking to get out of the position, or traders that are looking to short. It goes both ways. So at least from today, right? This is just today, May 3rd. You could see after the open, we ended up seeing this make a nice push up, and it was with the market, but we ended up seeing Apple make a nice pop through 133 at first. Now, the interesting thing on this trade, and in terms of reading the order flow, again, I'm just relating this to today. I can't go back to the 28th. I wish I was able to, but just looking at this and utilizing this data to predict price action. Well, you would like to think just between the breakout off these highs from today, roughly 132.88, and then the orders that got filled, as we would call it, Fausto and myself, we would call it buying volume as this order on the ask gets hit. We would expect this to create a support, at least after the market opens. So what shocks me, or what surprises me at least, is to see this, as it comes back down, it breaks through this white line, as we would call the VWAP, the volume weighted average price, ends up driving right down through 133. It doesn't even give it a chance to hold support. So in terms of our strategy and predicting price action based on the order flow, well, we would easily expect this to hold as a big support at first. But with the way this was just freely dropping, it wasn't even breaking through much volume across the bid, because if there was any volume on the bid, you would see it just across the heat map here, a darker orange or red line popping across here. That's your first hint of it right here at 133. But we would never look to buy a stock on the way down. We wouldn't look to buy a stock just on the bid and kick our feet up and expect everything to be fine and dandy. This is the perfect example as to why that's not okay. So, if you were to buy right here off this 133, or even off this 132.88-ish price from earlier after the open, right? The pop and drop and the breakout from this peak, you're not looking too good now as far as a day trade. Now, as far as a swing trade, or like at least a trade across the remaining days of this week, well, that's where I would just focus even on a bigger scale. You can scroll back on this program and basically just see a bigger order, or bigger orders that are across the ask here at 134, 135. So 135 certainly should be a long-term should be a short-term resistance, across today, across tomorrow, perhaps even Wednesday of this week. I say long-term because I'm a day trader, so I apologize for that.
Right, yeah.
But, so nonetheless, though, on the bid, you could see potential support coming in off of 131, 131.50, 132, and that is, casual. That's very common, rather, I should say, provided more volume just for any stock, let alone a blue chip like this. You're more likely to see volume spread across the order book, level 3, and you're shown on, as we would nickname, level 4, across, the 50-cent levels and whole round numbers like these. There's probably a bigger support coming in. Probably hasn't fallen too much. Oh, nope, there it is. Look at this at 130. So even outside of the 50-cent levels and whole numbers, which us day traders would be more interested in just using, on a level by level trade, the darker red lines represent the bigger support or resistance. So that's where I would say even a decade number like 130, a $5 increment number from that, like 135, 125, those are to be even bigger levels likely on a trade like Apple.
Can I just ask a couple of quick questions? The white line that goes through it, is that some type of a moving average?
So that's the VWAP, the volume weighted average price. So for all of the volume shown across this picture here, it calculates the volume traded based on the average price. So after the market opens, that's why even further, pardon me, but even further, I would expect this area here, even as it crashes below this white line, to be support.
Yeah.
To have this 133 here, but if it breaks under this price and runs from it, a common principle that we teach in our classes and our one-on-one coaching program that I do, even if you expect this to be support, it breaks through it so fast. I know it's easy to say this in hindsight, looking at an already painted picture, but again, this is a perfect example.
Yeah,
this support becomes resistance again, so you can't expect this to just break through this price because it freely fell through it when you were expecting this to hold at first.
The big green ball versus the big red ball, what's the difference again in those?
So the way I have this structured, this program is very customizable, and you can, there's a bunch of settings that you can employ on this, but it's to say that the larger dots represent bigger singular transactions that are on the time and sales program. So in terms of reading the tape, allow me just to jump back to my main regular platform that most of us are just used to.
Right.
And even if you're not used to TradeStation, of course, very similar tools on your own platform, whether it's Thinkorswim, Fidelity, Interactive Brokers, Schwab, you name it. But right here, the time and sales program, this is where we're seeing the already completed transactions from the day. So as this, Apple trade's moving, and I could jump even to a 1-minute chart here, squeezing up and down in this just tight range just across a slow Monday afternoon. But the time and sales represents transactions that have already been filled from level 3, but also from market transactions. So you need to read this in order to identify the bigger fills, including even here. I mean, this isn't too big in the grand scheme of 48 million shares almost today, but you could see a couple of these larger fills filled at the bid. They're filled in red. That means that they were filled on the bid side. You would think that that is now a buyer's shares. And that is, but for every buyer, there's a seller. That's exactly what we teach here at Cyber Trading University. So, seeing this in red, I would say that's not always a good sign in terms of expecting this to move up higher. In fact, if we happen to just see this hold under that price and we see more of this red over time, it wouldn't shock me to see this, continue to drop lower. Of course, the market's, hinging, or this is depending upon what the market does mainly, but you can see the SPY's just kind of just doing nothing really here, made a higher low, or, relatively double bottom, squeezed up a bit, but, just pretty slow here going into this Monday afternoon.
Yeah, well, what about 28% of the SPY is into like a few of the tech stocks. So, if you can't get Apple going and the other one's going, it's hard to get the SPYs going.
Absolutely, I agree.
Yeah.
In terms of the earnings, I was really looking forward to the remaining parts of this week. I have my big whiteboard earnings calendar, which of course you folks can't see, but today I didn't have any earnings listed. There was actually one that snuck up on me here today. It was a stock that we're very familiar with live inside our trading room, a stock Vaxert VXRT. Are you guys familiar with this trade?
No.
Certainly not a blue chip. So this stock has been in the news for a long while, since basically March of last year, going into the vaccine talk. This stock, alongside a slew of others, that ended up making a speculative news and pops and drops from that. Well, this ended up coming out with a bunch of news across the last week or so that led to a huge squeeze up. This stock was highly shorted to begin with. There's a bunch out there that are very heavily shorted still, even after that whole Reddit craze. But this was one of them, and I'm sure the Reddit folks there ended up catching on with this, and it pumped up more than it should have. But this ended up sneaking up on me here today. It ended up dropping right at 8 o'clock. You could see there. I mean, I apologize for all the wacky lines here as well. I could explain that here. That goes in part of my personal prep with day trading a stock like this. But it's to say simply, though, after this drop, some bad news happens. And if it's not bad news, maybe it's a direct offering of shares to where it drops down to where the listed price is at. That happens frequent. But man, you check out the earnings, they ended up reporting worse earnings than expected, and we ended up seeing them drop off even further after the open. So this ended up remaining a great trade, a great short going into this morning here.
I got a question for you. Do you go by sector sometimes, or you just have a certain, inventory of the stocks you're watching? Because today, we just heard the Buffett announcement over the weekend on some of his thoughts, and a couple things hit me. 4-week treasury bills are at 0 interest. His businesses are seeing higher prices and people are willing to pay them. And then, of course, he's got a red hot economy going. That sounds like a recipe for the metals and oil. And, I'm seeing my exposure in metal and oil doing very good this year, this day. Do you like a Newmont, rather than using an index, what about like a Newmont Mining or a GDX or something?
Absolutely. GDX is a great one to follow here. It's an ETF, so in terms of using this bookmap program, level 4 as we nickname it, it's tougher to use based on the ETF orders that are out there, because they're largely algo driven, I feel. So in terms of seeing that, and along with that, ETFs are made up based upon stocks, bonds, etc. So with this here, was this VanEck? Okay, yeah, this is VanEck Gold ETF. So I don't know exactly what this is composed of. I know that JNUG.
It's got a lot of big companies
like
generally.
Newmont.
Yeah,
Okay,
Newmont and Barrick and those kind of guys.
Okay, great. So Newmont could be a stock that we could look at here. Maybe it will look a lot more, as I would kind of call it, normal.
Right.
So here, let me pull this up. It will probably take about 30 seconds on our heat map program here. Nice push up today on NEM. We ended up seeing it make, as Fausto and myself would call, a slingshot move, where it ends up dropping down, coiling up, and ended up seeing the breakout higher later on.
Right.
So let's take a look here. So
looks like anything above 63 was a deal.
So one facet of day trading that we typically look at, and it might be tougher to use here just from the pre-market, there wasn't a whole lot of activity within the pre-market, and that's fine. But it's to say, what if history repeats itself? That's just the common question that we like to ask. So what if history repeats itself in the sense of buying? So after the market opened up this morning, and this is pretty important, I'll bring this back to my TradeStation chart, my normal platform in just a moment, but you were asking about the big dots. And this right here it shows the data box that you could see there. It's kind of faint writing in white, but it says volume 10,100 at 63.35. That's not really that big in the grand scheme of things, 10,000 shares.
But on a percentage of what it normally does, is it big?
Well, that I can't answer right off the top of my head. Probably
Right.
not. Probably not really.
Right.
But this is pretty big. 138,213 at 63.48. So that is what I personally call, and we teach this within our phase 2. It's within our intermediate course that we provide, but it's what we call the opening bell print. It's a market on open transaction that shows up on the time and sales platform here, the program, I should say. So I'll even just show this straight from the tape from this morning. Thankfully, my broker platform TradeStation allows me to go back on the time and sales with their TradeStation 10 here. Let's check this fast. And I only show this just because this is common, this is normal on a day-to-day basis. So you could see it right there, and it's actually a duplicate here, print in white. So disregard that if you can, but this is the exact transaction that I just read off to you. So this showed up right at 9:30 this morning. It creates a level. So if you just think about that and say, well, for all of that big volume that got filled, 138,000 plus shares at exactly that price, who's buying and selling and transacting at that price at that time? I don't know. I can't answer that, but all I know is that that's pretty big. The stock today is trading 3.5 million shares. So I don't know the percentage of that print to that volume total across the day, but that's fairly big for what we would look for in a $63 stock. So it's like asking if you were to see on level 3 here, this is what we call the order book, the ECN book, level 3. If you were to see a 138,000 share order on the ask here, compared to all of these other orders that are out there currently at this time, is that not huge?
No, totally.
So you would have to respect that. And with that, this is where I ask, what if history repeats itself? So it's easy to study from in hindsight, but this is the way that we instruct and teach in our classes, in our trading room, etc. So when this ends up initially breaking through this 63.48 price, it makes a false breakout, a pop and drop. This is a very quick false breakout, mind you. This is only about 4 minutes worth of time, 5 minutes worth of time here. But as a day trade, if you see and recognize the false breakout at first here, and if you have strength, if you're bullish on the sector, right? And not everyone can say that there is. I'm just spitballing here and saying if you're following gold, if you're bullish short term across the week, long term, of course, but on the short term side of things, it's easy to say. But when this re-breaks over this price here, this is your entry point to get in.
Right.
As far as a day trade, at least. Now on a swing trade, you might sit here and say, well, why not buy lower from this price? Yeah, it's easy to say in hindsight that you can get in lower from 63.20 and so forth, but we're not following a stock on the way down, right? We just talked about that with Apple, right? We just did that song and dance on Apple, and look where it is, right?
I mean, your philosophy is basically we're not going to try to pick the low point. We want to get on a train that's running. We're a momentum player, and until the momentum is going your way, you're not looking to play pin the tail on the falling knife.
That is exactly it, right? Like in terms of day trading in particular, and the way that our style of trading that is. It's kind of frowned upon because it's very dangerous, right? I mean, hey, I can't tell you that it's not. That would be very irresponsible of me. But it's for me to tell you that so long as you have structure, discipline, organization, and if you have the effort to put in yourself to study and really to learn from your mistakes, what other traders are doing themselves, just be a good student. That's all. Age is just a number in this game. I mean, we have folks that are 60, 70, 80 that are trading with us live every day. They have their own accounts, they have their own account sizes, they do their own share sizes, but they're with us, they're studying, they're following up with us, and they're gaining a lot every day.
Two other things I just want to look at, silver and the energy. SILJ definitely looked like it was going someplace here right on the opening as well.
Okay, so the SILJ trade is trading over 1 million shares today. Is it? Yeah, this is FANG ETF. Okay, so
Silver juniors. Yeah.
yep. So the one I would go with, and this one trades just more volume for us here.
Oh yeah,
Fausto and
those are the
myself.
more blue chipper ones. Yeah.
Yeah, the SLV here.
Yep.
And then also, I don't think this is an ETF. I mean, please let me know if I'm wrong, because I've
No,
long
no,
thought
that's
that
Pan American.
PAS,
Yeah, Pan American obviously is one of the front runners.
one of the bigger silver equities, that is.
Uh-huh.
Yeah. Okay.
Right.
So
Right.
let
Yeah.
me pop this up on our heat map program, and I'll kind of do a similar analysis. It's
Yeah.
easy to say that both moved up, very similar to what we saw out of the
Mm-hmm.
gold today. All metals ended up doing well. When you had said metal as well, one thing for me, when I first started learning with Fausto, even as an employee with zero market experience back in 2014, I'm sitting on the sidelines as a student, quote unquote, learning and really picking this up, just day in, day out, more than
Right.
most or anyone. This stock X, US Steel, is like one of my favorites.
Mm-hmm.
For any of our students that might be listening in live or over the recording at least, but they'll get a kick out of hearing that. I used to love trading X back when it was a $10, $12, $14 stock. This was
Right.
back before the 2016 election, and then it took off. It fell out of our price range. I'll load this up as well, just because it's a personal interest.
Yeah, and it's an industrial metal, and there's supposed to be some bottlenecks on supplies of these things.
So the SLV trade, and I'd assume the same with Pan American, this is like the type of look that you'll get it from this program if it's an ETF or a fund at least. And you don't really see much visibility out there. You don't see any darker orange or red lines that stretch across this screen. And it's to say that if you were able to see that, at least that gives you something to work off of.
Right.
That gives you some sense of support or resistance to work off of here. At least with Newmont Mining, you saw that at least throughout the morning here at 63.70-ish here. 64.20 it popped up, one here that was stretched across the day at a major level, 64.50. So for SLV, you don't really have that there. So I mean, it's easy to say because it already happened and all of these were moving similarly, but based on this opening bell print, that market on open transaction that I mentioned before on Newmont, this here is a 252,000 share transaction priced at 24.60. If you scale this back, you should see that 201,000. I guess that aggregates it a little bit more, but at 24.60, a 201,000 share print came in on this SLV trade. So it made the same exact move. I think X might be a better one just because being an equity, it definitely has a better look to it on this heat map structure. Like you could see even pre-market, there was resistance off of 23.99. I'd mentioned before with Apple that for an equity at least, and especially a blue chip like Apple, and we'll call X, more well-known stock, a blue chip, steel stock, you're more likely to find bigger orders off those 50-cent price levels and whole numbers. So here off of 23.50, when this pops up and you happen to see this, it goes to show that that's a pretty big order that's out there, a big sell order that's out there. It creates a resistance, but that's resistance until that order gets filled. So when that order gets filled, that's the momentum that you would like to see in order to, potentially, and that's the key word, of course, because, it's all looking back in hindsight, but, potentially see the stock move up over time.
Yeah. The idea is, to try to follow the momentum and the order flow and ride it until it stops doing that. And then on a day trade, you're trying to get out when it looks like the momentum is turned, right?
Absolutely. Like as far as the day trade today, I stopped trading roughly around like 10:45, 11 o'clock this morning for a Monday. It's a long story, but I was being more cautious with my trading today because I was on a really nice hot streak from dating back to Friday of the week before last. And that's not luck, but that hot streak is going to end at some point. You'll run into a couple of ruts or, silly trades, or the market's not going to move the way you want it to. So I thought of that ahead of time. I had a good morning today. I took my money and ran. Now, I say that because you look at this X trade, I wouldn't be in this trade even if I finished up nicely from before. I just right now wouldn't be the time to be trading this. I know that's hard to say actually because this ended up making a big squeeze up. There could have been some good money to take on this trade. When this ended up moving up to the resistance off of $24, you could see that there was a bigger order on the ask, roughly about 16,000 plus shares. So I would expect that to hold if that was there, especially since pre-market hours or, as the market opened up, that solidified into a resistance level off of 24. If I was in a trade here, I would easily sell at 24. It pushed up a little bit higher, but that's not to say that you can't get back in later on. I mean, the ship has gone and sailed for us here, at least if I ever wanted to jump in off 24. But at least if you were watching this from about 10, 15 minutes ago, you could see when it re-broke that 24, you ask, what if history repeats itself? So based on the initial buying that you had, that's how you want to go with the momentum. There was a false breakout here. All right, that's fine. And there was one here as well. But if it keeps needling that resistance and breaks through it, that's where you look to take the trade. So it's easy to say, but if you jump in at 24 and even on 500 shares, you're picking up $120 profit right now in what, 10 minutes time, 15 minutes time?
Right. And again, that's the whole idea with the day trading, is obviously to get in and out and to try to grab some money and try to ride a little momentum. That's pretty much the long and short of it, right?
Exactly. Yep.
With regards to OIH, that's an energy thing, energy servicing, and it definitely looks like it's got some legs as well.
Okay, here, give me a brief moment. I have to jump to that. OIH. So this one probably not trading as much volume. Yeah, just it's like a spottier chart, as we kind of call it, more inactive in terms
Skinny.
of the volume. Yeah,
Right.
316,000 shares traded today, but this is an oil ETF. So I'm not as familiar with the oil sector, or at least crude in particular. I know that there's a few oil stocks that our traders tend to focus on, and I'll look at them, off of news or off of, more active mornings in the pre-market trading hours. Oxy,
Okay. Yep.
Apache,
Yep.
MRO, if I'm not mistaken, is another one,
Right. Marathon.
right?
Valero, VLO would be good.
And COG, HAL. So I'm
Looks like
familiar with
it looks like something's coming into that market, huh?
Yeah, there's a few stocks that are moving up actually pretty well. This COG one actually looked all right. I don't know how much volume it's trading per minute, but better trend here, at least going into this time of the day. As
Yeah.
far as like, again, I keep relating back to what we do, but in terms of a day trade, seeing a stock near like 2:30 in the afternoon, 2:45 Eastern time, that is, near the highs, approaching the highs, even after it shook off the highs previously, if it moves back up there and it's right there, that's the type of trade that you would expect further strength in that direction going into the final hour of the market day. So it's not a full-fledged guarantee that, hey, if this is at the highs going into the 3 o'clock hour, that it's going to run. You need to have the momentum behind that, right? The buying. But if there is, an order on the ask, a resistance level that gets taken out, then that allows the stock more ability to make a better move from that price for it to make the pop. This one that I'll show you briefly, because this is not oil by any means. OCGN, another company that we've been trading across the last really several months, but across the last week has come out with vaccine news, and I have my chart all lined up here, so pardon that again. But even here going into the afternoon, this is so strong. You could see this breaking through resistance from earlier, even at 15. It had a really tough time breaking above this line here, and really once it did, it didn't make the biggest move from it. I knew that 15 was a major level, and that was going to be a price level where we saw more volume compared to most get filled across the day. So my personal rule of thumb, and Fausto says this in his own ways too, just to say it, it's that when a big volume level gets filled, you'd expect to see a pretty big move from that price after.
Mm-hmm.
If it doesn't make that big move right away after, or shortly after as a day trade, then there's a good chance it's going to make a big move, just not in the direction that you're looking
Yeah,
for.
something's wrong.
Yeah. So, this was as like, PG is to say, it was a pain in the butt today, this trade off of 15, but look at where it is now. Look
Yeah.
where it went to. So
Yeah.
when it broke above this 15, it still had a tough time. It was shaking about 10, 12, 15 cents lower, it seems here, but it eventually pushed up higher, used this as support, and ended up making that eventual run up that we wanted from the morning. But even here going into the afternoon, this was pinning up against 16 when it broke above 16 here. And I could even go back on the time in sales. So if you don't mind, I could probably take a quick 30 seconds to do this here.
Sure.
But
And when you're doing this, you have to be willing to have sold it and be willing to come back in, even if it's at a higher prices, because circumstances have changed.
yes,
In other
now,
words, when you're day trading, you might get kicked out, and then later in the day, it might give you another signal to get back in, and you have to be willing to mentally, buy back in something that you sold at a lower level, don't you?
Yes. Now with that though, right?
Which is a big mental thing.
We're using just this one price level here, 16, just for right now. But
Yeah.
it's to say that, hey, what if this stock breaks down so much it drops down to 15 again? Well, if I am bullish on this stock across the next however many minutes, then perhaps that 15 could be the slingshot point where we see it, break under and over that, and it runs up higher. I was relating before to seeing a stock near the highs going into 3 o'clock. So if that happens, to see it move all the way back up to 16, that's a tall order. So, distance is equally as important as time here in terms of seeing continuation in a stock moving higher.
Mm-hmm.
Trying to go back on the time and sales program here. I probably need to.
Do you find some stocks that are fairly orderly to do the day trading in? I mean, I'm sure if you do it all the time, are there stocks that seem to trade, let's call it, better than others for the day trading?
Yes. Now, notice, so with that in mind, notice what I'm looking at on the far right side here.
Mm-hmm.
Look at the TradeStation matrix. So you're looking at a stock that has a consistently tight spread. You're looking at a stock that has big orders at a lot of price levels. Even live here, we're just looking at this live order book. I was trying to get my time and sales to show, but I'll do that in a second. You could see even here at 1560 on the right-hand side of my platform in blue, that's an order on the bid. That could be a potential support for a stock trading 230 million shares. That's not really the biggest amount, but just below there, and I wish that it will pop up in the next second or so. It did before, but at 1550, the 50-cent level, there's going to be a bigger order. You could see it. There we go. Hello. 38,000 shares popping up right there. So that is an order on the bid, and that creates support. So, hey, if this doesn't break above 16 very soon, then I'd like to think it's going to test that price. And, if it breaks below there, I wouldn't be as interested in buying the stock until it can get back above this price.
Right.
Because again, I'm so thankful that you had brought up Apple out of all the blue chip stocks to start with, right? Could have been Amazon, could have been Microsoft, which you did mention, but you said Apple and it resonated with me. It's just that 133, that can't be a better representation of, why we
resistance.
why we can't catch the falling knife. We
Right.
can't assume for this to be support. So, going back to that OCGN, the vaccine play here, if this fails to break out over 16, this may look to drive right back down to 1550. But, it might break below there. And if it breaks under and then immediately back over, that's a bigger sign to me. That would tell me, hey, if it does that, then there's a better chance of it, solidifying that support again, and for it to run up higher into the close like we would, dream about, like we would hope to see.
Now, the day trading, it's real important to have volume because you want to make sure they can absorb your orders. And it's real important to have relatively tight bid offers because you can't have a situation where it takes, 25 cents to break even between the bid and offer, right?
Agreed. And it's not only just based on the spread, but the consistency of the orders that are out there on the bid or the ask. So for a faster moving stock, even like this OCGN, this is a fast mover. I mean, for a $15 stock, for it to be making, even during slow lunch hour here, 5 to 8 to 10 cent bars at times, per minute. That's pretty fast. So you would like to not only see a tighter spread between the top bid, lowest offer, but a consistency of orders that can create a web of support, a safety net for you at least, so you don't, overreact on a big drop and you close out at market 20 cents lower than you thought that you were going to close out at.
Right. Slippage. Yeah.
Exactly. In terms of that, allow me just to say, for anyone that's looking to get into day trading, do not look to use market orders. I would primarily use limit orders on my trading. I mean, unless if the stock is much slower. I mean, we can go to a name brand like Ford. I'm not afraid.
You wouldn't use you don't like markets even on something as thick as Apple?
Apple moves a little quick, so it's a more expensive stock, so it should. Just that's a very general rule of thumb, which doesn't always apply on a 100% basis. But Apple definitely has great liquidity for its price. Really quick, just to show you what happens here on OCGN, just because I have my level 4 up on my other screen, which you can't see, but we just missed the big break below 1550. If you just tried placing an order on the bid at 1550 to buy, you're down 20 cents instantly.
I see. Yeah.
So to Apple, everyone has their own cup of tea, right? I'm not saying that it's, breaking the law if you use a market order. I'm just saying my personal preference, I would primarily use a limit order on a trade, even like
Yeah.
Apple. It has great spread and great liquidity.
And then if you don't get filled, then you do a cancel replace.
Yes.
Yeah. Rather than just, yeah. Some people say on other types of trading, when you want to go in, you play the prices right with a limit order. When you want out, you use markets. But in this particular case, because you're working for relatively smaller amounts of money, you're trying to, shall we say, make the pencil a little bit sharper.
Yes, we need to get in at our price or better, I guess, but that's not always the case. But our price at our desired level. So I would much rather use a limit order for that, unless if it's going to make a huge drop that we're unaware of. And that's the risk that comes with it. But unless if that happens, I'm sure using a market order now on Apple, you're not going to get burned too bad on an entry. But it's on a swing trade or investment trade basis, then of course you're not caring about the pennies on that trade. You're caring long term. So if you can get filled at 132.52 or 132.72, I don't think that's too earth shattering for you on a 6-month long term trade.
A stock like AMD, doesn't it do like a ridiculous amount of volume?
Oh, no,
Does
I
that
can't.
also mean that the spreads are tight?
I can't believe that you just brought up AMD right now. So my brief history with AMD, right? So I told you folks just to begin and everybody else listening right now that, hey, I started off with zero market experience back in 2014. So that means, hey, I don't really have the experience of dealing with the shakes and the rattles and rolls of, a stock that's making a move, let's say off of earnings. So AMD, and I'll remove my lines here. I remember watching this back in 2015 or 2016, one of those years, and it was $8, $10, $12 stock. It was after it already moved up like 600% from like $2. It bottomed out at like $2, ended up moving up. Myself and a colleague at that time, we had an account split, and we ended up diving into AMD, and we did it on way too many shares. It was on 3,000 shares. And for us, that was a lot at the time, but it's to say that that was like a day trade size position as a long 4 to 5 year hold that we were anticipating. Long story short, the research and due diligence I did on AMD at the time, back when it was a $8, $10, $12 stock, I guess it was 2017 at that point. But it's to say that I thought, and the research I read, it was going to be a $70, $75 stock in 5 years, between the deep learning, artificial intelligence, Lisa Su, their CEO. Like, I'm definitely interested in AMD. Like, I know a little bit about it. And trust me, I know about it because after their first inline earnings, it had to have been this year, we were up a little bit, it dropped, and the drop ended up causing us to lose like 80% of our profits. We ended up closing out with like maybe like $1,000 or $2,000 net total. Better to have a profit than none at all, but look what happened after. So the inexperience there led me to not get back in. And if I did, it should have been on a much smaller share size. So I'd be just at least less tense about the move. But it ended up making that big move. And the fact that you just brought that up, it just immediately reminded me of that short story. So I apologize for bringing that up right there. Let's get AMD up here for you. With AMD, you could see from the morning today, it ended up making a big drop. So, I mean, as soon as the market opened, there was no real retracement on this. For a trade like AMD, if it's not from 81.50 or 81.55, this range of support that it broke under at first, which it did hold as resistance, I guess it did. So there was room here. But even here after, as much as this stock dropped, it hasn't really made any real serious retracement back up to a major prior support level. It held it briefly here before it broke lower. And then after that, it was just a lot of chop around the 80 level going into the mid to late morning here. So this could be one of the more annoying parts with day trading. And that's not having a stock move the way that you would want it to move. So let's say here, if you miss the boat from 81.50 or 81.55 as a short on AMD this morning, it was dropping. So you're not going to try and catch the falling knife, and you'd much rather go with the flow, go with the order flow, right? But as this continues to drop, you might think, well, hey, this is going to continue to drop over time. Or you might sit there and think, well, hey, going into this point in the day, it's already dropped off so much. You might look at this as a trade and say, all right, well, where's the bounce going to take place from? Well, that bounce should, or that move rather, if it's not a bounce, it will be a continuation on the way down, but that move should be right from here, this dark red line, this big support off of $80. So what's annoying about this move is that when it ends up re-breaking this support right here, you would anticipate continuation on the way down. Unless if there's something very big right below this price, holding it up as support, which I guess there is, 79.70, but that's not as big as this red line here. The red versus the orange represents a bigger order versus smaller one. So even when it re-breaks below 80, I would expect continuation. So ends up dropping down just a bit and makes this short, or makes this quick little squeeze back up. Here, same thing. I'd expect this to begin to break down over time from the 80 level. But even here, it does a little bit, but still is shaking around. It's not making nearly as good of a move as you would want it to. And then finally, just give it a few minutes of rest and break. It was consolidating over 80. Once it ended up re-breaking below that price later on, going into 1030. And it took a while, but you ended up getting your continued move. So there are times where my students will trade a stock like AMD. I will. I mean, OCGN, we just saw it before. But we don't control the stock market. We don't control the stocks that we're looking at, the stocks that we're trading. Even if I can trade 1,000 shares of this $80 stock, which is a lot to risk on a trade, for any trade, my 1,000 shares does nothing to 44.7 million share AMD. So
no, I mean, it takes in so much volume. Yeah.
Exactly. So it's like simple philosophy, right? It's easy to agree on this, listen to this, recording right now and say, yeah, of course, like that makes sense. But how often do you think about that in the heat of the moment?
Yeah, no, exactly.
Probably not as often as you should.
Do you do much with the international markets? Like Baba today gave you a nice little $5 pop off the opening, and a guy like Charlie Munger's daily report or whatever that newspapery thing that he's in, they took a position. Is
So,
it? Yeah.
allow me to ask you: is that why specific? In your opinion, do you think that's why Baba popped right away shortly after the open? Because they're not always tied or married together, but to see AMD tank and that squeeze up, that's pretty interesting. They've traded similarly in the past.
Yeah, I just was looking at Baba from the standpoint of their PE ratio has dropped about 33%, and so has their book to value. So obviously it's discounted since September 30th rather significantly. And there's some guys out there who are not that stupid who've been buying it. So I figured it might be something to look at.
Oh, as well as a sort of swing trade or long-term trade, then one thing I want to do here is just look at the daily chart. I mean, I'd mentioned this very briefly before. And I day trade probably about 80 to 85% of the time now compared to swing trading. In fact, I have more invested in crypto than I do invested in stocks. I day trade more than I invest in crypto, but that's a different story. It's to say with, Baba here, as this is making what we would call a higher low from the last dip back from the beginning of this year, I would definitely want to see this build support above EMAs, look to see this begin to, squeeze up more. It's to say if you can get in right now and then that happens, of course, that would be great to see and you get in at a lower price. But the way this is moving, and should we get, and this is where I was saying, should we get a drop in the market, right? That was the whole preface to the beginning of this discussion.
Right.
You would have to expect Baba to go with it, right? So that's where we see a potential breakdown at this point, maybe down at 200, maybe down towards at first 196, 195 here. I could even go to a weekly chart just to show even stronger support long term. But that's where I say at that point, should the markets drop, and I wouldn't expect them to drop too much, but it's to say a stock like this and anything that we've spoken about previously here, we'll go with it. And maybe something like 200 could be a long-term support level over time.
Or if it goes to 255, the train looks like it'd be leaving the station, and then better to jump on a train that's headed to Boston than to Florida, right?
If it's the summer, that's not too bad. So maybe.
But yeah, that's all back to the momentum concept.
Yes, exactly. Like here right now, I mean, this is 1 minute chart. I need to do that. Get back to daily here, but I'll jump to 1 minute. I mean, on a day trade side, from a day trade standpoint, of course, this is dropping, right? Like, and it's right at a support level from earlier today. I mean, it just made a small little bounce here and then ran back up, but there's a reason it did that, right? So if it keeps dropping down to that price and we keep seeing selling coming in, my volume spikes here, a little bit more red now and more red on the time and sales program, perhaps, I would expect continuation at that point over time. And I say that for today, this afternoon, not to necessarily say, tomorrow, this week, long term, but, from a day trade standpoint, the day trade strategies that we employ at Cyber Trading, it's to be used on a bigger scale. You just
Mhm.
need to be able to follow the order flow first in order to realize how that paints the picture on the chart that you're looking at. And then you kind of, have the light bulb turn inside, in the back of your head. You say, wait a second, I could apply this here on a swing basis as well. If we keep seeing a lot of buying coming in off 200 at some point, and I'm spitballing a hypothetical here, but
Right.
let's say the markets drop, this goes down at 200, we see a lot of buying, big transactions, big prints on the time and sales at 200. There's a reason that it's doing that, or even around that price. Smart money is not always trading at one specific price level. Especially longer term trades, you'll tend to see, bigger structure being built around a series of price levels over time. So it creates, like I'd said before, a web of support. I'm relating that to like the time and sales transactions here, but it relates also in terms of reading level 3, reading the order book, seeing bigger orders that are popping up to create that, so to say, web.
How about a couple of different stocks that there would be? One would be in gambling, and one would be in pot. And
And
are there
national
any?
gaming.
Yeah, is there anything like either DraftKings or Tilray or something like that that you could get an idea of how that's trading?
Yeah, absolutely. Well, first I'll say though, like I'm looking at my whiteboard
Or Penn?
calendar,
Yeah.
my famous whiteboard calendar here in front of my home at my home office. You have Penn National Gaming earnings on Thursday morning, that coming up on May 6th, and then
Mhm.
DraftKings earnings coming up just that Friday morning, the day after. So I look forward to that. I'm not as interested necessarily in reading like the finance numbers behind it. I'm definitely interested in learning more about what they might be offering ahead, if there's any other states that's going to be regulating or legalizing gambling
Right.
and opening up shop. So, a company like Penn National Gaming, which acquired a social media company, Barstool Sports, they've taken off, right? And they've taken off with the market, but to see a stock go from 4 to 140 in such a
Hmm.
short amount of time,
Hmm.
it's not to say the social media, people or Barstool or whoever is driving that specifically, but acquiring a company like that can give you such a bigger audience and more eyeballs on the company, not just on a social media scale, but of course uh, in a blue chip scale, so to say, being spread across Bloomberg Terminal and being spread across Benzinga Probe, big news alert service companies that we use here. More traders are going to get more eyeballs on a company like this. It's easy to say after this move already happened, and it's not that I ended up swing trading this. I did not, but it doesn't surprise me that this made the move that it made. Now, in terms of what's ahead long term, it's all hinging upon the market. I think we're not going to go into another shutdown, right? I mean, that's behind us at this point. But between the tax hike potentially from Biden and a couple of other things, just with the market moving from the last few months, we're due for a drop. So to see Penn National Gaming here on the daily side of things break below my 100 EMA on the daily, it was teeter-tottering over that price for the last few weeks. We had the
Hmm.
big snap from there.
Hmm.
Ends up reporting bad earnings, but you could see this drop off a lot more, perhaps down towards the big support level over time, like a 75 or
Hmm.
76 or so here. Just the highs back from September of 20.
Yeah, and they have drops before. You see 70 going down to 50 right there.
Now,
Tilray,
Fausto,
what about Tilray? Is anything going on with that?
well, Tilray announced officially, and this was speculative. I guess we were wondering when the official date would be. At least we, as in my students and I, inside our trading room, they've been long rumored to be merging with another pot company, Afria, APHA, and that news was made official today.
Oh,
So
okay.
with that, we ended up seeing Tilray make a bit of a drop. Wasn't really on our radar too much after the open, after the drop, because once it broke below support, that's where you just think, well, it's likely to just move down more, and it's not shortable. So we're not really as interested in that as like a short. Now, as far as long term, we ended up trading Tilray not just back from 2021. This is like a stock that I will probably always remember, like my AMD story from before. Not
Hmm.
that I was swing trading this, but I need to go back a little bit further on the daily chart. And if you guys know what I'm going to talk about here, you probably just are thinking it in the back of your head. This stock ended up running from like 25 bucks back in 2018 all the way to 300 bucks. Ended up making this massive short squeeze type of move.
Hmm.
As a day trade, it was incredible. As a swing trade, it was something that after a certain point, we just said to stay away from, because you would think it would come back down. Well, it definitely came back down, but anytime you see a stock make that type of move, and that's not really like a smoke and mirrors type of like squeeze up here. Sometimes my platform will give me like a move on the chart that it's not really that exact move, like reverse splits factor in and make it seem like a much bigger run up. This stock went from 25 to 300. So what's stopping this stock from making that type of squeeze up, or even a fraction of that type of squeeze up later on? And we're not like glued to this stock across the next year and a half after this squeeze up, but if it's active in pre-market, if there's news on it, obviously we just had the news today on Afria, we just said. So, and obviously I say the word obviously because you look back in January, it ended up making that fraction of a run up, right? We saw it go from 10 to 65 and back down. So we knew that just as likely as it was to see the squeeze up back in January, February, that it was just as likely to see it dump off like it did back in 2018. So you might sit here and think, well, hey, what if you end up getting in at the wrong time, or what if you end up giving away a lot of the profit? Hey, it's hard to say that it didn't happen before, right? This already made a move back in 2018, made the squeeze back in January, February here. So again, in terms of long term, and really with pot altogether, it's similar to gambling, I will say. So, it's in terms of legalization and getting it federally legal. So that type of news should catapult all of the pot stocks. But we've been sitting here waiting when, and, wondering if it's going to happen this year or at all. I know more and more states are, opening up, but that hasn't really affected Tilray or any of the pot stocks as much long term. It definitely affects it short term in terms of seeing a pre-market pop, a big squeeze up, and then the dump off. So a lot of this move here was contributed to hearing more about Cuomo potentially legalizing it on a state level here in New York, and then state to state otherwise. But you can't rely on that long term. So if you're looking for a really good entry as far as a swing, I would focus more on the chart than the news. And then when the news comes out, that should catapult things. So if you're this bullish on it long term, that's where I was saying before, you don't focus on the nickels and dimes and the pennies. If you're focused on this long term, read the chart, focus on the historical resistance, and perhaps that could become support if the markets drop off entirely.
So, all right, well, we're coming to the top of the hour, Josh. So this is a great time to just wrap it up with, again, who you are, and again, what they can get out of the Cyber Trading University. And if you have any special offers or something, this is a great time to extend them.
Absolutely. So first and foremost, it's been a pleasure, David. Thank you so much again for having me on your platform. Sans the slight little internet issue I had, which is very brief, so that didn't really tamper too much with my presentation. Thank you so much to everybody listening in right now. It's been a pleasure being on this broadcast. I hope to be on here at some point soon. I know that Fausto is typically on here, as he should. So in the event that he needs to be subbed in for, you need someone to sub in for him, then hopefully I'll be back on here. But nonetheless, for everybody tuning in live, I want to show really quickly this, and I'll show my little offer here at the end. Our Cyber Group trading room. It's our live professional trading room. We host it Monday to Friday from 8 a.m. Eastern time all the way to 4:30 p.m. every day. I need to, let me try and log in here quickly. I got to show the screen here quick. You should be able to see at least the chat that's going through here. You could see a couple of our traders like Andrea and Ken and one of our instructors, Rich, commenting right now. This is just a little basic slide. Rich, it looks like he's sharing the screen here in a second, just refreshing it. But, this is our live trading room. We host our audio broadcasts here every day, our morning meeting that Fausto hosts at 9 a.m., the afternoon meeting, which I'll be doing myself coming up in just about 30 minutes for everyone live there. And I do that on social media as well. So if you're interested, folks, make sure that you sign up for our trial. That would be right here. You can go right to this link right here, ctu.co/trial, or you can call the following number, 877-70-CYBER. 1 week, $9. Just watch. You're not looking to trade with us because you need to learn before you earn. So the last thing that we would want you to do is join our room, try to trade the same stocks that we are on a bunch of shares. That's the way that you're going to lose your money, not gain your money. So, if you're looking to learn first, make sure that you join our trading room as a trial member. Go right to that link on the banner below just to get started.
Okay, sounds great, Josh. Thanks a lot for being here. As far as Option Professor is concerned, we have a weekly market update we send out free of charge. You just need to go to the website, optionprofessor.com, and put your email in, and we go over everything from the stock market, bonds, commodities, international, energy, and metals. So you get a lot for your free newsletter, and we've been doing it for decades, so we certainly have something to say. Okay, thanks a lot, Josh, for being here, and back to David, and good luck to everybody this week.
Thank you so much.
All right, thanks, guys. Great show today. And Josh, thank you for being here. Great to have you here for the sub for Fausto. And yeah, definitely want to have you back soon. So
I appreciate it. Thank you guys again for having me, and I look forward to it. Hey, it was a slight bit out of my normal realm, which is good because you don't like to be too complacent. So I was excited talking about the SPY and a lot of blue chip stocks that I don't day trade myself as much, but know how to review and analyze just as much as the ones that I do happen to trade. So I really appreciate that. Am I good to
definitely
leave this room now at this point?
Oh, yeah, I'm just closing up here. So yeah, so just so just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast directory or app. Also, be sure to join us tomorrow for Analyze Your Trade at 4 p.m. Eastern Time. You can always go to TimingResearch.com/live to get access to the live show. And also, we have another one of our big Synergy Trader events this week. So it's been about 2 months since the last one. So we have 15 presentations lined up, and this will be on psychology, discipline, and time management. So that'll be this Wednesday, May 5th, and Thursday, May 6th, from 10 a.m. Eastern Time until about 5 p.m. Eastern Time. And so Fausto is going to join us for that. And Josh, do you have his title?
I don't have it on. I don't have it on me.
Oh, Iceberg Orders, how to beat market manipulation is what Fausto is going to be talking on.
He'll also be showing the level 4 that I brought up just before as well, the bookmap program too.
Okay, great. Yeah. So so like I said, we have 15 presentations. The option professor will be doing one as well. Also, Mercedes Van Essen, Michael Filagera, David Keller, Valerie Fox, Jeremy Newsom, Julie and Adrian Manns, Mandy Rafsanjani, Norman Hallett, Anka Metcalf, Doc Severson, Maria Villatoro, and Sean Kozak will all be doing presentations. So again, that's May 5th and 6th, this Wednesday and Thursday, from starting at 10 a.m. Eastern Time. So be sure to join us for that. And like I said, you can always go to TimingResearch.com/live to get access to the live events. So just want to thank my guests again for today. Josh Levitan of CyberTradingUniversity.com, first-time guest here, so happy to have him. And the option professor of OptionProfessor.com. Thanks, everyone.
Thanks, David.
Thank you.
Mm-hmm.